All right. What's going on, everybody? Christopher Inks with Texas West Capital. And, man, it seems like we had an echo there with that intro. Give me just a minute here. See here. Are y'all hearing that echo? Sorry about that, guys. Are y'all hearing the echo in there? I've got an echo on my end here. I just want to see if you guys are hearing it as well. So y'all let me know, and then we can kind of move on here. Yes, you can hear the echo? Okay, give me just 1 minute. All right. You guys are saying no echo there? All right, let's try. Let me try this here. You guys are saying no echo. God, why am I getting echo on this? Let me try this here. Let me see. Give me just a minute, guys. Let me see. Give me just a minute, guys. Let's see. All right, let's see here. All right, let's see here. What? All right, now try. What is the deal? All right. What is the deal? What is the deal? Let me see. Yeah, I've got it muted now. So I can't tell if anything's showing up. I don't know what the heck's going on with this at the moment. Anyway, hey guys, listen. God, this makes no sense. Don't do anything different here than what I ever do. Is it any better, guys? Let me know if it's any better at the moment here now. No more echo now? All right, well, let me, God, I don't even have my headphones here. Oh, I may have to put in my, okay, I may need to put in my, what do you call them here? My AirPods here, potentially. So we'll see if I can see the guys. I'm going to go ahead and bring them up. Well, I see Andrew's here. Tillman's off for the moment, so I'll bring Andrew up here. What's going on, man?
Yo, what's up, man? Glad to be here.
I can't hear anything. Man, I don't know what
to
do.
Hear me?
Give me just 1 minute. See if these work. What a start. Now I got to set these stupid things up. Y'all ever have one of those days? Or just one of those days? I'm having it at the moment here. I can't even get these stupid things to show up now. Let me see. I promise, guys, I didn't do anything different here. Let me see. All right. Let me see. Unbelievable. Come on, connect. It's absolutely crazy. and I'm losing it all here. Well, I guess what we're going to do here is I'm going to go ahead and have Andrew and Tillman get at it. There's Tillman. Have these guys get at it. I'm going to sit here and see if I can figure out what the heck's going on with my sound here. Sorry about this, guys. Go ahead and jump on it there and talk about Bitcoin.
I think this should be a reoccurring thing that we do in the segment. I've seen that viral video, Andrew, of the boss that has the millennial cut up the
Gen Z.
video.
This is what the Gen Z did. Yeah,
where he's just breathing. We should cut that intro up because he did a lot of heavy breathing and a lot of uhs, and it'll be a nice B-roll footage for us to use.
Yeah. Those kind of videos for some reason get more attention than just about anything these days. So we can be as smart as we possibly can be, and somehow that particular cut up would win the day. It's coming to the conversation this week. There's obviously been a lot of geopolitical things going on, a lot of bombs flying over in the Middle East, and some movement in Bitcoin. But even as I speak, we in the past, let's call it 12 hours, Bitcoin is popped all the way down to 60 and change, and now it's back up to 62 and change. So typical of Bitcoin, being a somewhat uncorrelated asset, that even when you've got kind of the worst geopolitical sort of circumstances, hold steady, hold strong, still in the 60s. There's been people that have sent me individually or in public responses to some posts that I've put out there over the last day, a chart showing like the people selling Bitcoin and buying gold in this 24-hour period because of Iran bombing Israel. And I just respond whenever somebody sends me micro looks at Bitcoin. One, I snicker whenever I see it. And then two, I just send them the 1 year chart. The 1 year chart, Bitcoin's up 120%. Like, what are we talking about here?
I learned a lot at the University of Texas, more outside the classroom than inside the classroom. But one thing I learned inside the classroom is that war requires a lot of money, and money is most easily acquired through printing, and printing of money makes everything go up. So it's really short-sighted, in my opinion, to think that any any unrest wouldn't lend itself to more money being printed and higher prices of all assets going up. So I again, like you said, the key is short-term. When people see scary stuff on the headlines. Sorry, I'm making my coffee. I'm sorry, I got a little bit of sore throat, but so when people see the scary headlines, what do? They fear sell, and that provides the knee-jerk reaction that has the price movement that gets more people to knee-jerk reaction. But what fundamentally is behind selling? Like, let's take that argument to the nth degree and to the most extreme case. It's war. It's World War III, and the whole crap falls out, and lots of stuff is changed, including money. And would you rather have a diversified, way to spend than just the fiat for whatever country you're sitting in right now? This is a universal truth. This is like having a gold coin. It's a universally recognized store of value. And that's valuable when there's unrest, in my opinion. So I just don't understand why humans are the way they are, but back up a little bit and stop looking at the time frame.
Another thing that happened is the longshoremen, the potential at the ports, they're on strike or whatever. And immediately there's a wave of panic that finds itself into different pockets. Like people at Costco are going there to get as much as they possibly can. My own 20-year-old daughter are like, hey, should we go get some more stuff because my friend told me something about the thing? And I'm like, no. We should not go get some more stuff. But
That's no
point being is,
different.
yeah, those moments have ripple effects through the world of finance. And again, you could boil it down to, there's a reason why the Federal Reserve is in a dovish stance right now and reducing rates. They see something, they hear something, or they're aware of something, and reduce rates means more access to capital, easier access to capital,
More
access
deals.
to capital. Yeah, when it relates to Bitcoin. You put Bitcoin in a post-halving environment and a reduction of rates environment. It's hard to lose, man. It's hard to lose. It really is.
Well, unless you are chasing your tail.
Yeah.
And I've been there as a trader. When I was young, I'd hear something and I'd react to it.
Mm-hmm.
And my dad would be on the couch next to me and saying, Tillman, if they are saying it on TV, it's already happened. The time to react to that was a month ago. Mm-hmm. So we only have the information that we have when we have it. Right. The question you have to ask yourself is, who's had this information and how long have they had it? And what have they done? What have they done to prepare for it? And look at Bitcoin. And look at the people who have built the foundation as a career over the last year. They have a lot more stroke than I do. And they're a lot bigger than anyone else that has an opinion. Larry Fink has an opinion. And honestly, it's more important than anyone else's because he has the means to act on that opinion in a way that is more impactful than anyone else's. No different than Michael Saylor, and no different than, when you're a market maker, you're a market maker. And so I just look at the things, from a headline perspective and go, they're disjointed from reality. But they do provide a buying opportunity. So, take advantage of the price dip.
Yeah, there's, we're in a position right now. I just had a conversation with an Arch Public client that's kind of leveling up inside of our ecosystem. And the, conversation was, and a large portion of people that are Arch Public clients own a reasonable amount of Bitcoin. And, the conversation turned to, buying more. What should I do with my position? How should I hold my positions? Should I self-custody? Should I custody on Gemini? How should I go about doing that? And, the bottom line is that it's very difficult to find a time over the last 5 years where it was a bad idea to buy Bitcoin, even from a price standpoint, right? We've held inside of this 60K level now for, I don't know, months. And so unless you bought at the absolute tippy top of 2000,
or unless you made bad trades, like it's all about time frame, right? Mm-hmm. So if I'm a trader that's going in every day and trading, I could have a horrible day and I'm out and I'm taking my losses and my lumps. The question is always with the markets, what time frame are you judging against, right? Mm-hmm. And so if you're looking at Bitcoin, you could pick lots of bad trades. You could pick a lot of horrible losses that people are incurring yesterday and the day before and the day before. So the question becomes, is that your investment strategy, is to day trade, or is that a part of your play money? What are you using for your acquisitions? And so I think it goes back to like dollar cost averaging as it relates to a store of value has never been proven to be wrong. You cannot miss, right? And buying on the lows in a constant manner, like a savings account, is where the magic happens. And
the reason why that's so dramatically effective with Bitcoin is because Bitcoin's performance comes in 8 to 12 days a year. 8 to 12 days a year, that's when you get significant 2, 5, 8% type of movements in Bitcoin that end up being the totality of the performance for the year. So the other 300 and some odd days that's not happening with Bitcoin, you're doing nothing or you're moving slightly lower. Volumes are somewhat muted, and price is edging just a smidge lower. And being able to daily or hourly or weekly acquire Bitcoin during those other 345 days where there's not dramatic upside movement that's the key to building a uniquely profitable position.
I grew up in a household, I had 4 siblings, and one of the ways that we were demonstrated the power of money was probably a lot like a lot of families, but you know those huge 5-gallon water jugs that you put like the Ozark jugs?
Yeah.
We had one in the basement. And when we came home every day, we'd take our change and we'd put it in the thing. We'd fill that sucker up. And then we'd take it to the bank and dump it into the coin machine. And you'd inevitably have like $600 or $800 in that thing. And as a kid, it was very impactful to see what compounding did and to see what little discipline accrued over a long period of time could give you. And we got to split up the money as kids and reinvest it and do. So it was a really good object lesson. And it's kind of like that with Bitcoin. If I look back on my life, I learned about Bitcoin early. I have lost fortunes of opportunity cost. I mean, just absolute fortunes because I didn't have the conviction. I wasn't feeling it. I was playing on my feelings. At any given moment, I was kind of going, is this Bitcoin thing going to work? What, who's on which side at this point? Oh, no, now we're talking about Bitcoin Cash. Are they going to really win the war? And it just all this stuff that pulls you in emotionally that makes you start doubting, instead of just looking at it as like the pennies and the nickels and the quarters going into the big milk jug, right? Or the water jug. I wish I had the discipline to DCA since the beginning of time. And my thesis is that if the smartest guys in the room that I know are all saying that Bitcoin's never been more riskless to own than right now compared to the upside, then it seems like it would be a smart tactic to deploy at this point in time. But that's, just a thesis. Chris, do we have you back? Are you back?
I think so. Can you hear me all right?
Yeah,
you can't hear me?
Yeah, I can hear you. Yeah, you're good.
Man, see, this is terrible. I can't even look at this. I can't even deal with you. I'll look at that. Yeah, I don't know what happened with my thing there. You guys aren't getting echo or anything, is anybody?
You're perfect, man.
Oh, awesome. I know I'm perfect, but unlike some of y'all over there give me a hard time. Man, oh man. Anyway, yeah. So
I love how you decided to go live before you figured it out. That's a pro move right there. I love it.
See, this is the thing. If y'all had been here on time a little bit early,
we were on a call with somebody that you introduced us to. So far, we were preoccupied with something else.
No, that's good. That's good. I'm glad y'all were talking with Gary. I think there's just a lot of opportunity with y'all and Gary and just connections and whatnot. So.
Well, I'm a huge fan. What he's doing as it pertains to showing people, it's one thing to talk the talk. It's another thing to walk the walk. And it's another thing to walk the walk and film it and put it out on social media. And he's done the pinnacle, right? He's showing people his level of conviction by selling real world assets and buying Bitcoin with the proceeds.
And not just a little bit. I mean, we're talking about a $2.4 million additional home he had that he sold. And, he's had this one that he's got there. I think it's around 12.5 million. He's had that up for sale a bit for Bitcoin as well. Even Grant jumped in it. Grant's got his property over there in over there in Miami. Got 30 somewhat million, I think. And I know for at least a bit there, I know he had it for sale for Bitcoin. So, and for those who haven't heard, Grant's very much real estate. He's all about, the tax benefits and the income and all that stuff, the yield basically, right? Cash flow. But from what I've heard, he does own some Bitcoin as well. So, Gary's doing a little bit there. I think getting him more and more into it. But the thing I love about Gary is I've been friends with him now for well over a year, I guess now. Is that, like you said, he kind of puts his money where his mouth is, and not only that, but he does it in a big way. And the other thing I really appreciate about him is a lot of, I don't know if anybody really listening in has the kind of wealth that Gary or especially that Grant does, right? They both have a lot of wealth with them. But it allows people to see these things that I talk about and these things that we've been talking about with Periods of Bitcoin which is how does that other side view assets? How does the other side view Bitcoin in terms of what they're doing? Because, Bitcoin is a part of their overall, their plan, their contingency plan, what they're looking at, their wealth and all this. And so anybody that follows Gary has been able to kind of really get a peek into that, something that they won't know really unless they've been around people that hold that kind of wealth. And, when we first started talking about with Gary, it was about this idea that, we want to see these ultra high net worth individuals getting in like 1% to 2%. And that would be a significant, inflow to Bitcoin. And these days already, I mean, we look at, even in terms of institutions, I know Bitwise is talking about, I've been following them very closely for, the last year now. And recently they've been talking about how the asset managers that they were talking about that started with like a 1% earlier this year have upped it to like 4 and 5%. And then more and more of those types are coming on. So, we don't tend to focus too much on price with this show. It's more about what is Bitcoin, how do you approach it in terms of, your wealth plans and whatnot. How do you focus on that? How does it work? What is the, the potential in the future for that? And I think these are starting to show us, guys like Gary, the folks at Bitwise and what they're letting us in on and what's going on with them. I think it allows people to really kind of see, okay, even at the beginning of the year, if you thought, yeah, maybe whatever, at this point, you should really be like, okay, let's start taking this more seriously. And I think, your analogy has been really great, which is the idea that up until January, basically, we were, the root system, right? We were underground, and coming out through January and the ETFs, and now we've got, options on IBIT ETFs are going to be coming out as well. And we got all these other things happening. And now we're on that above ground level, which is an entirely different kind of growth from what we've been used to.
Yeah. Well, and I think that guys like Gary also, if you understand economics and you understand the potential of Bitcoin, so forget whether it's right or wrong for a second. You're just looking in life for potential home runs, right? You're saying, okay, can this have the 10x opportunity attached to it? Well, in Bitcoin's case, it's proven to be able to do that consistently, over and over and over again. So when you're asking yourself, okay, where is all my, where's my diversification? What allocation? And do you have any 10x's possibilities? And if you don't, ask yourself then, what's the easiest one to participate in that could be a 10x? Bitcoin gets to the top of that list pretty quickly. And it's only going to get to that list even more so the longer it continues this trajectory, right? Because it's more, it's starting to concrete itself as a power law, or playing by a power law, like people have said. And, if 10 years isn't a big enough swath of time for you, well, what is 100 years, 200 years? If it's still on the power law 300 years from now, are we going to call it power law at that? Like, when do we start believing that people who understand the fundamental building blocks of economics understand what good markets look like, and that good markets yield liquidity, and liquidity is growth? Like, it's just how much money can you attract? And the more products you have built as a subsidiary set under Bitcoin, like we've been seeing, the more liquidity you have. So we are truly, as riskless as we've ever been on the Bitcoin curve. And it still, I think from a lot of people's vantage point, still has that 10x potential, or even more. So it's something that can't be ignored if you believe in diversification. And so one of the things that I like about Gary is even Peter Schiff, let's say he was on the call right now. I wouldn't take the approach that most people take with Peter. I'd say, hey, Peter, do you think a car's going to ever appreciate? No. Okay. So if I sell my car to buy Bitcoin, is there a potential that Bitcoin appreciates? Yes. So that's a good sell buy ratio right there, right? Can we agree that that would be a good economic move? Because I'm trading the same downside. If you're right, they're both going to zero.
Yeah.
If I'm right, one's going to a lot.
Yeah.
I'm getting value. There is a value of upside there that you have to acknowledge. And the only thing that he could then say is well, your money would be better spent selling that fiat and going into gold. And I would say you're right to a certain point. And then he's backed into.
Whoa. We just lost him.
No, we didn't lose him. I was tired of that line of conversation. So
you guys cut me off. But here's the point: we would at that point backed him into the corner because he could not argue that diversification is not a good thing. And at a certain point, you don't want any more gold. If you have 25% of your net worth in gold, when's enough's enough? You know what I'm saying?
Yeah.
And where do you put the other cash? And so the question is gold and Bitcoin a good place to diversify cash? Not either or.
Well, I was concerned, Chris, that he was going to throw another whole life analogy in there. So I pushed
from last week, the whole life policy, huh?
Push that button real quick.
Listen, in the famous words of Einstein, the people who understand compounding interest are the masters, and the people who don't are the ones who are slaves to it.
Well, I'll tell you what, it's a great point what you brought up there about when you have so much of it, how much whatever, because that's the same thing Gary has been preaching about for a while now, which is this idea that we look at the markets, we look at the luxury watch market, we look at these things and they've kind of pulled back, and he says listen, these guys they've got, how many watches are enough, how much of this other stuff is enough? And, when you're at that level and you've got all this stuff, at what point, you're looking for something else. Bitcoin is that something else. Bitcoin is that thing where you kind of go, okay, well, I'm maxed out on watches. I'm maxed out on, gold. I'm maxed out on silver and whatnot. So what's next? And, so Bitcoin becomes the obvious, I believe, honestly, the obvious choice for that as well in there. So I like that you bring that point up about, 25% gold, how much more are you going to keep doing, right? Because at one point there's a, you're like, well, okay, I've got to do something else,
Well, you've got concentration risk, and that's not good from any. When you have wealth, the objective is to maintain it and to preserve it, not necessarily to leverage it into a 10x at 100%. You can take your 10x bets, but take it with 2% of your capital and 4% of your capital, and have everything else diversified. Even real estate people, even Grant couldn't argue this. And here's the point. Grant, do you own all your apartment complexes in one city, or do you spread them out? Yeah, I spread them out. Why? Well, because one market can go to crap real fast. It's the same thing with everything, right? Do you want all your money in one asset class? No, you want it diversified. And so the question then, Peter Schiff and the likes of those people are just dead in the water if they can't acknowledge the new kid on the block, because it's in the ETF club now. It's sitting next to the gold and silver ETFs, for God's sakes, and not to mention the fact it blew those records out of the water in terms of popularity and involvement. So, it's a moot point.
Yeah, for sure. And so I guess, I don't think you guys touched on it. Have you guys talked about the whole Israeli Iran thing?
Yeah, we just touched on it at the beginning. Yeah, we touched on it at the beginning.
Okay, yeah. I was just saying, my personal thoughts on it. I missed it, unfortunately, with you guys, what you were saying. But, my thought is, Iran's out there. They've kind of said, listen, we don't want to escalate this. And they don't. I mean, at the end of the day, let's face it, it doesn't matter whose side you're on or wherever you're looking at. The fact is, Israel's got a much more formidable military, and so, why would Iran want to get it? Right now it's retaliation kind of thing. But I think, personally, I think it's like it was last time. It's kind of like there's the one shot in, and that's kind of it. I don't really think it escalates there. I know a lot of people are really concerned about that. So I think we get our initial pullback. We got a good flush across the markets yesterday. I think there's a good chance we kind of follow up, even with Bitcoin now, as we kind of get into this week, which brings us to October. Everybody excited. It's October. October 1st comes in. Oh, it's not going to happen now. One day, right?
October is basically the same thing that the halving was this year. It's a total bust.
There are also 29 more days left in October. So October is nowhere near finished. And again, with Bitcoin, we go from 60K 12 hours ago to now 62, just like that. Right. And so, 29 more days left for October. And if we know anything about Bitcoin, it can have an October inside of 3 hours. It can go to 68 to 69 inside of, a day.
Yeah.
That's how Bitcoin works. It does nothing for all of October. And then on the 23rd of October, it pops.
Yeah.
Always,
it's October again. It's October
I'm
again.
Always reticent of retail slogan movements.
I get it. You're cooler than everybody else. Tim.
No, I'm not. No. Listen.
Hey,
case in point. You remember when Jamie Dimon was poo-pooing Bitcoin on public on TV?
Which time?
It's a scam. The first time, when he basically was asked the first time, like, "What do you think about Bitcoin?" and he said it's a scam.
Yeah.
He was buying.
Yeah.
That's what they do. So anybody who's going October isn't a buyer in my mind. That's not what you do. That's not, take a page out of Jamie Dimon's playbook, and you don't pump things that you want to go on sales.
But that again, we talk about that often, right? Because we're all, we know TradFi side, we're all, longtime market participants, but that's, what we're supposed to do, right? We're supposed to look for those discounts. We're supposed to buy when it's on sale, but retail unfortunately doesn't understand the markets, for the most part, right? When they first come in, if they're lucky, they stick around long enough, they listen to the right people, they get it. But what do? They freak out when price drops, right? And they sell, and they're like, usually when it's down there, usually when capitulation hits, they're like, man, I got to sell now. And then price takes off the other way, and they're like, what the heck? It always goes up when I sell it. It always goes down when I buy it.
Well, it literally is a zero-sum game. There's only 21 million. So when Jamie Dimon is on TV saying Bitcoin's a scam and he's buying and you're selling, he's buying your Bitcoin, literally. And that's the way the game has to be played in order for him to get in a position that's worth him being in the boat. It's like, have you ever watched the Shark Tank when the entrepreneurs, bless their heart, they come on and they've got a great product. They've got everything's great. They're even post revenue and it's looking blue skies. And you think they're going to get an offer and they say, well, we're going to sell 3% of the company for $500,000. And you're just going, no, they wipe their mouth with 3% of your company after their morning hors d'oeuvres. Like, come on, give them a piece of steak to chew on. And guys like Jamie Dimon, in order for them to accumulate a stake, it takes years. Like sometimes, it's a lot of buying.
Yeah,
and it's
exactly.
a lot of buying after people are selling or when people are selling. It's not just constant buying or the price goes up.
Yeah, and what's the other point here? The other point is that these bigger buyers, like we're discussing, Diamond and other large entities and other large, higher net worth individuals, it's not like a simple, oh, hey, listen, I'm going to plop 10 million down at this one price point, right? It's like, listen, we've got a range of buying we're going to be doing in here. We're going to be, buying over this range. Whereas retail, of course, always is like, listen, I got to sell this absolute highest price. I got to buy the absolute lowest price. And if y'all are listening, to what we're talking about here, understand that the absolute highest and the absolute lowest points are events, right? distribution and accumulation happen within ranges. And this is something, you know, I teach all the time. You know, and it's a great place to learn it is proper Wyckoff analysis. But the idea is that you're going to sell over a range. You're going to buy over a range because your targets are not like, oh, just right there. You know, your larger time frames, you're looking for much further movement. So if you've got a 10%, 15% range in which you're buying or selling, you know, you're stacking up or getting rid of for a longer haul in that other direction. And again, this is, you know, completely contrary to the way in which retail tends to approach markets, which is why they often get caught buying the, you know, often just, you know, the very absolute top area or selling the absolute, you know, low area. Learning, you know, doing well in the markets, and especially, I would say, especially when it comes to Bitcoin, is it really, you've got to really listen in and understand what's going on here. Because at this point now, if it wasn't clear before, at this point now, the big players are coming in. People with real money are coming in. And it's not a one-off buy here or there. And yeah, some of it's going to get bought off, you know, off market somewhere, you know, not on exchanges, but even that's on the exchanges, you know, there's going to be a range, an area in which they're buying, and when they sell, an area in which they sell. And, you know, the best thing you can do if you're in the market, and especially if you're in Bitcoin, is to understand that. So you're not trying to, you know, sell, you know, trying to find that exact low to buy or trying to find that exact high to sell. Just get within the range. If you can get within the range and work the meat of the movement, you guys are going to be so much better off. And right now, what's the movement? I know everybody wants to talk about that the tops in, cycle tops in. I share a lot of information, a lot of on-chain stuff that I get from other people. And nothing is saying that the top's in, especially in terms of Bitcoin. But
there's a
also,
lot of there, you know, there's a lot of this hasn't been talked about enough actually, is the amount of Bitcoin on actual crypto exchanges right now is as low as it's been in a long time, right? And so, you know, how do you categorize that, right? Well, in what way do you assume that Bitcoin has been moving off of those exchanges? Is it simply a move to self-custody? People have had the opportunity to do that for a long, long time. Or is it the fact that, you know, Bitcoin ETFs on a daily basis have to go hunting for Bitcoin to, you know, satisfy the purchases that are happening and the inflows that are happening for their products? How that plays out over the course of the next 6 to 12 months is going to be really, really interesting. Not only is it interesting from, you know, the acquisition of Bitcoin for the Bitcoin ETFs, but it's equally interesting as it relates to crypto exchanges and their long-term, you know, sort of viability, right? And what do those exchanges do? You know, 5 years ago, Bitcoin was the thing for those exchanges. I mean, that's 90% of their volume. So what happens next? Now you have a conversation about the regulatory environment. You have a conversation about the election. If it goes Trump's way, you know, most people think it's just it's a crypto free for all, right? Those crypto exchanges are going to be having a really good time. But if it goes the other way, it's not a crypto free for all. It's slamming doors and fingers getting sawed off by those doors. What does that mean for exchanges? What does that mean for where Bitcoin is held and custodied and movements? So, you know, the next 3 to 6 months can be very, very interesting.
Yeah, I would echo that sentiment. I think I think the I look at it differently than timing the market. I look at it like diversified asset class. If you don't own any, you should. Why? Because it's proven to be in that category, in that club. So how are you going to buy it? Well, if I buy it slowly and I do it very methodically, dollar cost averaging in, if I need cash and the price goes up from some of those purchase points, I can sell at a profit, right? And it doesn't mean I'm in profit on every purchase, but it does give me a likelihood that I'm going to be in profit on some of my purchases. And if it goes down and I continue to buy because I'm DCAing, it's only a matter of time before it goes up from those prices and I'm in positive to free up liquidity. So you just want to win on the bets. And you want, if you're trading, you want to hold until you're profitable and you sell and then you buy more and you hold until it's more. And when you have an asset that's continuing to average 60% growth per year, it's not hard to find places to sell for profits, right? And that will make you a less emotional trader, because it's just about when you bought the beans. I bought the beans at $1.69 a pound. They're $1.85 a pound. I'm going to sell some of my beans. Well, how much am I going to sell? 5% of my beans, I'm going to sell it and make the spread on that. Well, what am I going to do with that profit and the capital? Well, I'm going to buy more beans. What price? The $1.79. Why? Because that's today's price. You just keep rolling and you just are managing essentially that diversification model. And if you do that, whether you do it with a little bit of money or a lot of money, you can't lose.
Yeah. And now again, something we talked about on a recent episode was the fact that again we've got if you're looking for yield, if you're looking for opportunities to arbitrage, if you're looking for ways to make money off your Bitcoin without actually having to even get rid of your Bitcoin, oh my God, that's like heaven right there, right? Again, we've got options coming out on IBIT. And the real kicker will be when we can get some actual options on Bitcoin itself. I don't know when that's going to happen, but man, oh man, all of a sudden Bitcoin becomes this thing that you don't have to sell, and yet you can still create yield. You can still make income. You can still do all these fabulous things without having to give away your precious, right? Your Bitcoin. And I mean, for those of us that have been in this a while, I mean, that's what, even if some people didn't realize that's what they were looking for, now that they're hearing about it, that's what you're looking for, right? Because you've got people that say, I'm never going to sell. I like to say I'll probably never sell, but I'm not an idiot. There's probably a price point at some point, or, heaven forbid, we talk about there's always two kinds of sellers, right? There are your sellers that absolutely have to sell, and then your sellers that want to sell. Anything can happen in life, right? And then all of a sudden you need cash and you have nothing else. You have to sell your Bitcoin, right? You don't want to be a forced seller, but we can't guarantee that we will all never be forced sellers at some point. No matter how diehard we are as far as holders go, right?
Well, I mean, you can make it very improbable. If Bitcoin is only 2% of your liquid cash or net worth, then it's probably not going to be so bad that you got to go into the bottom 2%. You know what I mean? So it just depends on how large your bet is, and that's where the discipline comes in, and that's where honestly I've learned over the years of looking at this not to kick myself and beat myself up. There are some things that I'm willing to take bigger bets on. And when they don't go my way, it's not the time to go, poor me, poor me. It's the time to acknowledge this is what it feels like when you take big bets and they don't work. And that teaches you to go, oh, well, next time, you got a lot of conviction here, but maybe I should take it slow and, nibble off a little bit here and there and wade into the pool versus just jumping into the deep end. And those are lessons that are more valuable than any graduate degree that you can get. It keeps you make lessons with small money, you end up with big money, and then you make lessons that are, you don't make the big bad lessons with the big money, hopefully. Andrew,
you're muted, Andrew.
I'm still focused on the negativity around Uptober. Okay, I haven't moved off that point. I'm still focused on that negativity, and here's why: because Tillman is wearing a shirt that screams Uptober. Right? It's festive. It's exciting. It's Uptober. It's turning an October into Uptober. We're all having a good time, and then he comes in with, Uptober.
No, I'm the opposite of that. I'm optimistic about every month. It doesn't have to be one. I don't need a headline to get me juiced up, man. You remember I wore this shirt in September too.
Yeah, you might have.
Well, and here's the thing, guys. Let me see here. Let me throw this up here. This right here is the weekly global liquidity. right here. And so, again, we talked about more than a few times on here, the fact that global liquidity is what drives overall asset prices, right? So when you have global liquidity rising, overall asset prices tend to rise with it, right? And if you've got a drop in, they tend to, why? Because if it's rising, that means we have more fiat out there, more loose cash sitting out around there, and people are going to put that into risk on things, right?
Correct.
Yeah. But here's the thing. Everybody gets it like, well, why is Bitcoin still sideways? Well, because there's a lag effect, right? There's a lag effect of potentially even months. It's not like the banks go out there and go, well, here's your stimmy check. Here's your stimmy check right from the central bank to the individual people out there. It's got to, it goes to the banks. It goes to the government. It's got to work its way out into your, individual hands. So if y'all are out here going, man, well, everybody keeps talking about global liquidity and it's rising, but Bitcoin isn't going anywhere. That's why, guys.
It's going to keep rising too, because we're going to have another 25, 50 basis point cut in November. If Trump gets elected, he's going to press the Federal Reserve to do 50 basis points. You can bet your rear end that's going to happen. And so, see that little tiny spike there at the end, that little tiny spike higher, that puts us above the 2022 level, I think there.
2023.
There's gonna be another spike higher because rates are gonna keep coming down. So no, you're right. Listen, it's hard to imagine that there's been a better environment for Bitcoin as an asset than there is right now. It really is hard to imagine. We've had times where Bitcoin is rocketed higher, and we live in this silo of crypto Twitter, and everybody's all excited and sending out NPC memes of everybody giving a green candle hug, all that stuff. But we're in this position now where we're 6-7 months post halving. We've got, decreasing interest rates. You just showed global money supply ticking higher, potentially a new administration. And by the way, a vice president that owns significant amounts of Bitcoin and is a very, very real pro digital asset guy that understands the space. Trump is pro crypto. But just because
Freedom Financial Fund,
it's an expedient, political issue. But JD Vance is legit. I mean, he's the real deal on this stuff. So, it doesn't get much better than. And I said nothing about BlackRock and Larry Fink pounding the table every time it goes on CNBC.
Every single time.
Yeah. Andrew just did a great job, more eloquent than I did, of explaining the delta opportunity that doesn't exist in gold that exists in Bitcoin, and why, if you're questioning should I own gold or Bitcoin, the answer is both. And it answers yes on both, but for different reasons. But they're the same. Where are you going to get that type of sizzle? There's no other asset that could catapult itself into the center stage of global geopolitical, horse trading than Bitcoin. There's nothing that even comes close to that. And it's been 15 years in the making. So, buckle up and get your popcorn. It could be a fun
if you're going to, over the next 12, 18, 36 months, you're going to see the conversations at a wealth management level that will go something like this. If we're going to have 5% of your portfolio, and let's call it commodity alternative asset type of vehicles, we should probably have 1% of actual gold and 4% digital gold, right? So that's a 5% number, because gold is not going to be talked about as a strategic reserve in third world, second world, and even first world countries on a go forward basis. That conversation is long since passed. But it's still a valuable commodity associated with inflation, blah, 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 blah. But Bitcoin is just a different version of that has a number go up quotient to it because of its limited supply.
Well, it's
So
like Tether. It's just pegged to value, right? Every one of these commodities is just it has a relative spending value against other commodities.
Yeah.
Cash is the denominator that they all have to work against. But the question is, again, what type of value do you have in the numerator? What does gold give you? It gives you a pretty good hedge against inflation, but it doesn't give you much upside, and
No,
and
exactly.
it can give you upside relative to inflationary days of old, but it can't give you upside compared to the hyperinflation that we find ourselves in now. I just want to paint a picture for you, and this is legit. Over the last 5 years, we have seen more than a 40% increase in prices. Some would say double that, like 100% increase in prices in a lot of categories. Well, gold's never going to keep up with that. And there is a pinch point coming with Bitcoin, and even the miners know it. Why? Because the miners are losing money at this rate. The price has to go up from here.
Yeah.
And so this equation continues to look sweeter and sweeter from an upside perspective. And it may not work out, but let me paint the picture for all you blackjack players out there. You're at a table. You're playing 3 hands. First card, ace. Second card, ace. Second hand, ace, ace. Third hand, ace, ace. Are you thinking at that time like, oh, I'm going to play frugal? No, the time is to split the aces and to double down on everything you can because you've got the odds in your favor. And so you may lose every one of those hands and walk out a loser, but you shouldn't regret the play. And that's the way I look at Bitcoin, is like everything Andrew just said bakes into one hell of a story that if it's right, the sky's the limit. We're in something called price discovery mode, which is a fun place if you've never been there. When an asset doesn't know what its price should be, it can go crazy.
Isn't it something when we put our 3 heads together and we get a super cool analogy that Tillman just did about aces and gambling as opposed to whole life, right? So the level up there is I'm proud, right? I kind of bullied him into going away from that, right, into something cooler. So yeah, I'm
just trying to subtly teach you that math is applied to all areas of your life.
Well, I think
a couple.
I think Tillman, we need to go back to what was said earlier about Jamie Dimon and how he talks down the thing that he's interested in. And so I think if we apply that to Andrew, not that he has to talk it down to get other people to sell the whole plot, but I think maybe we might open his closet and find a
he's
whole
a huge whole life-ful.
He's
Northwestern Mutual spokesman behind the scenes.
Oh man. But yeah, no, seriously.
This is not a sponsored chat. This is not a sponsored, it's not a sponsored YouTube.
That's what it is. He's getting paid. He's getting paid to slip the sponsor stuff in there so he can get paid, and we don't get a part of that. That's what's going on here.
No, yeah, you're right. You figured me out. You got me. You figured me out. You got me.
Chris, whatever you come up with, I agree. It's 2v1, so let's keep it that
way. But here's the thing, though. I think Tillman brought up an excellent point, and the fact is, if you're in markets, too many times I see people get in markets, new traders get into markets, new investors, and their basic idea is, oh my God, it could possibly do this. So that's what I'm trading into. It could possibly be the top, so I'm going to sell. It could possibly go up, so I'm going to buy. But the reality is, in the market, you're looking for probabilities. What is more probable than not? Bitcoin, if you paid attention, Bitcoin has given us a great history. Now, nowhere in this are any of us saying that previous results are going to be indicative of future results, right? We've been in markets that isn't the way it works. But what you do is you look at that asset and you go, okay, so the entirety of Bitcoin has been this move up. Really, it's just been this hyper move up, right? And back in the beginning, we had stronger moves down, And as we're seeing this year, those are starting to get leveled out a bit. They're starting to get tempered a bit because, again, as we talked about, we've got real money kind of coming in at these points. It's become this large, really large asset class. And so we have a history of what is likely to continue, which is up. And so, again, as Tim was saying, you're not getting into Bitcoin because you definitively are guaranteed that price is going to go up. But you're looking at it going, man, the odds are this is probably a good play. And if it doesn't work out, it's not like, oh my God, I shouldn't have put my money in, because that's the difference, right? That's what makes the difference between those that get kicked out of markets pretty quickly and those that are in for, 5, 10, 20, 50 years, is this ability to go, okay, well, what is the trade? What is the investment? I could be wrong, but if things line up, if things are set up there where it is a good trade with a high probability and it doesn't work out, it doesn't mean you were wrong for taking the trade. It doesn't make you wrong for taking the investment.
Especially if it fits in your macro risk management allocation. Yeah. Like if you need a high risk, if you need some high risk exposure, right? If your goal is to replace your micro cap, portfolio with some digital assets, that is a high risk endeavor. Like if you spread your money out across micros, listen, it's a high risk endeavor these days doing anything. How many of the electric car companies, including the one that slips my mind, that was the biggest, that was a total fraud. There was no technology behind it. It was like literally just a huge publicly traded scam. So what you hope is that critical mass is built. And the laws of nature, in order for something that has momentum and mass to be altered off course, it's going to require something equally equal in mass or equal in momentum or greater. And so Bitcoin has accumulated this mass and momentum as this store of value. Yeah. What are some of the things that could derail that? Well, Shade 256 could be obsolete tomorrow. Would it derail Bitcoin forever? No. Would it be a setback? Yes. Would there be a lot of fear of people going, Bitcoin's dead, your money's gone? Yes. But we would have a lot bigger problems because every secure network in the world would be down and that's vulnerable. So yes, there are things out there that no matter how much critical mass you build, no matter how perfect the scenario looks, that are complete deal killers, and you just don't know it until you know it. And Blockbuster learned that lesson really, really well when they said, well, you can never stream movies online. No, we don't want to partner with you, Netflix. And then, they were obsolete 3 years later. So it can happen to anything at any time, but you're betting on mass and momentum is the point.
And by the way, for those of you that like that little talk about Blockbuster there is still one solitary Blockbuster store remaining. It's in Oregon. You can follow Blockbuster on Twitter, and they're usually pretty good with some stuff.
They can't shut it down because it's been overtaken by squatters.
Hey, man. Funny how that works, right? But anyway, man, so I apologize for the beginning of the show there and just having my my issues with the sound and whatever. I don't know what the heck happened there, but thankfully I was able to get in here. I appreciate you guys for coming in here and kind of carrying that at the beginning there until I could get in. Listen, guys, if you're following, make sure you hit the like, thumbs up, follow the channel, follow us on Twitter. AP_Abacus is Andrew. Texas OL61 is Tillman, and I am TX West Capital there on X. Check out their company at archpublic.com. It is archpublic.com. What was that?
TheArchpublic.com.
TheArchpublic.com. See, I finally got your X handle correct, and that's why I always ask when I say it. TheArchpublic.com, guys. Check them out if you're looking at algorithmic trading ideas and whatnot. I would probably choose them among any other algorithmic trading company out there. And no, they don't pay me to say that. But also check out TWC Traders Club. We give you real time, alerts of what I'm trading. Fibaswani, Andrew, and Vince are all trading throughout the day. We've had an amazing start. We launched it a few Tuesdays ago and have just been absolutely doing insane on it. And importantly, yesterday, very cautious with everything going down. So, sometimes, as Tillman and Andrew have been really good at pointing out, is sometimes it's not a data trade, as their algorithms do. Their algorithms look for the opportunity to trade, and that's where they go in. The chance where, again, we're talking about probabilities, more likely to be successful than not, and that's not every day, guys. So check them out. Come check us out. Either one of us, we'd all love to have you guys in there. Other than that, man, I appreciate you guys coming in as always. Really glad you guys got to get on there with get on the phone there with Gary and speak with them. Because again,
big fans of what he's doing. Just had to pay him homage and kudos to the way he's selling fiat and buying Bitcoin. It's pretty awesome. Yeah,
few out there doing it like he's doing it, and like you said, recording it the entire way. And hey, if you wanted some other interesting stuff, he recorded, made many videos from when the hurricane hit over there in St. Pete a few days back. So you'll see Gary out at midnight and 2 a.m. Out there. So crazy time. We laugh a little bit about it with Gary, but a lot of people, unfortunately, really kind of hurt with that. And hopefully they'll get out of it as best as possible with all this going on. I think it's kind of crazy that that you've got individuals out there flying in supplies and helping people out and being told, hey, listen, if you do it again, you're going to get arrested. Well,
that's I follow somebody on Twitter named Joe Kerr, Kerr, and he's got a picture of the Joker as his thing. But he just had a conversion experience and came to know the Lord, and has really just kind of a very inspiring thread he's started. But he just got in his car and drove out there to go help, and he can't help there. He literally can't find. It's really I don't know what's going on, boots on the ground there, but somebody needs to step up and take charge. It sounds like it's a total mess.
Yeah, absolutely awful. But hopefully, everybody listening in made it through all right. Again, if not, we're kind of sending our thoughts and our prayers and whatnot. Been a crazy kind of time. But anyway, we're going to get out of here, guys. That does it. That's the hour there. As always, check back on Wednesdays, 11 a.m. Central, 12 p.m. Eastern. And we'll be sitting here talking about all things Bitcoin. Not usually focused too much on price, more about, again, the whole kind of the ecosystem, the ideas. Where does this lead in the future? How should you approach it if you're an investor? Things like that. Because, again, we do have, between all three of us, so many decades of experience in markets, not just Bitcoin, but TradFi as well. And, when Andrew's around, it looks like he already jumped off, but when he's around, he does have those connections to, to the big banks and whatnot, so we can get some real good information about what's coming out with them. Thank you, guys. This was very enlightening. Digital Mining Solutions says, hey, I appreciate that. Glad you enjoyed it. Tillman, don't let him knock you about the shirts and the whole life, man. Just keep doing your thing, man.
I'm an offensive lineman. If I let what people say about me bother me, I would have been in trouble a long time ago. Let the haters hate.
There you go. All right, guys. Hey, listen, like I said, follow these guys, follow me, follow the channel, hit the thumbs up, share, leave a comment. We'd love to hear from you guys. And if there's anything, again, I want to say, if there's anything you guys want to hear us talking about in relation to Bitcoin, leave a comment under the video or on Twitter, X, whatever, under the video there. So that way we know, and we'll be glad to address it the next time around. All right. Until then, you all trade safe out there. Remember, the only thing you control is how much you lose. So always, always, always keep working on that risk management. Tillman, thank you so much, man. I will see you guys next week.
All right.
Take care, everybody.